Welcome to Peak Finance, your algorithmically pegged asset on METIS Andromeda. In this video, we will be looking into LP staking and the mechanics at work which help the Peak ecosystem thrive. We have other videos in our series which go into certain functions of Peak, and if you aren't familiar with the ecosystem, please check out our introduction video linked below. The second phase of the Peak ecosystem after the Genesis pools is LP staking. LP staking may be a familiar concept to you if you have participated in DeFi protocols before. At Peak, however, the LP phase is also an essential function for generating our initial supply of Peak and Pro. After the Genesis pools have completed and investors have earned Peak from staking their METIS, they will now be able to combine the two into an LP pair and earn more Peak. The LP phase will actually occur in two stages. The first stage occurs immediately after Genesis pools end and will enable Peak METIS LP pairs, which will issue more Peak rewards to the community. In these 2 weeks, our investors' goals will be to compound their Peak and METIS tokens to increase their LP depth, which will also enable an open market through the decentralized exchange Tethys, but more importantly, it will be responsible for setting our initial peg value to the METIS token. After the 2 weeks end and all the Peak locked in the contract has been emitted to our investors, a second LP pool will open and rewards will be switched from Peak to our share token Pro. These new pools and rewards will last for 1 year. There will be two LP pairs available through the Peak ecosystem. These are METIS Peak LP and METIS Pro LP. Both of these pools will pay rewards in our share token Pro. As we outlined in the intro video, Pro is the share token for the Peak ecosystem. Owning Pro will enable you to participate in inflationary epochs when we are above peg, as well as grant exposure to our future developments. While the Pro token, when single staked, only emits Peak when the protocol is above peg, the LP pools will be active with consistent emission rates regardless of the peg for the first year of the Peak ecosystem until all Pro tokens have been distributed to investors. This provides interesting and fun opportunities to allocate your holdings in different ways depending on the market conditions. METIS Peak LP can be very profitable when the protocol is at peg or within a short range of peg. When the Pro printer isn't running and bond emissions are not releasing, LP pairs of the pegged assets provides a way to profit from simply holding METIS and a token equal in value to it. Now, this certainly isn't investment advice, however, there are many interesting ways staking can contribute to the ecosystem and ways to avoid losses in the marketplace as well. Let's take the METIS Peak LP as an example. When we are above peg, the price of Peak will inevitably come down again through inflationary mechanics. A possible strategy to avoid impermanent loss is to sell your Peak while it is above the price of METIS and rebuy as we get closer to 1-to-1 again. The LP pools are designed to set our initial peg, create liquidity in the market for Peak, and generate the Pro share token to the investor. That doesn't mean you need to simply stake and forget. There are many ways to participate which can help you profit even further with Peak. The Pro token is incredibly important to the Peak ecosystem, and farming Pro can lead to amazing gains over the life of Peak as we move back and forth over peg. In our next video, we will discuss the Pro token, ponds, the TWAP and epochs in depth. This is phase 3 of the ecosystem and explains the fundamental principles at work within Peak. We look forward to seeing you in the next video. See you next time, Peakers.